David, thanks very much for taking a few minutes out of your busy day to speak to Abbey Wealth. Firstly, could you just tell us your position in Rathbones and a bit about your history in the financial markets?
Yeah, sure. I'm the head of multi-asset investments at Rathbones. I'm responsible for managing the Rathbone multi-asset funds. I'm also involved with the proposition to intermediaries for the UK DFM business as well. In terms of my history, unfortunately it goes back a long way now, over 30 years, starting in the offshore world. So I've never really had a UK bias to my investment strategy, which is particularly relevant for your clients. I worked at Hambros Bank, then Barings Bank, and then Rathbones for the last 11 years.
Brexit is a hot topic on everyone's mind at the moment. All our clients are asking about it.
Yes.
March 29th next year, what in your mind constitutes a hard Brexit? And what impact will that have on the markets?
So, I mean, the media loves to talk in terms of soft and hard Brexit, and the reality is they're pretty meaningless, and I don't sit around worrying about what a hard and soft Brexit are. To me, it's we fall out of the European with no deal. That's probably a hard Brexit. Or we have a wonderful trade agreement, 100% as we were before, which would be a soft Brexit. I think either of those options look pretty unlikely at the moment. There's going to be some kind of Euro fudge, I suspect, whether that's Norwegian plus or Canada minus plus France. I don't know. This is something that's keeping me awake at night almost on a daily basis and altering my strategy, particularly with regards to currency, every day. At the moment, I think the most likely outcome is that we push the can down the road in great European traditions, that the transition period transitions for that much longer. That's not great news, to be honest, in terms it creates more uncertainty. But it's fluid, and so we just keep an eye on it, and we just keep reacting to the news flow.
Okay, and following on from Brexit, what impact do you think that'll have on currencies, especially the British pound?
Well, as I said, sterling is the key barometer. It's how the rest of the world is pricing Brexit risk in. That's the really important point for us at the moment. And because we're sterling-based strategies, any foreign currency that we hold clearly is at risk. Sterling is undervalued, as most of your clients will know who think in sterling and go abroad. They're buying less Big Macs for their money, right? So sterling is undervalued, and that's a risk to us. So the way that we react to that is that we're hedging some of our overseas currency, about 40% the US dollar at the moment, hedging 90% of the euro, 90% of the Australian dollar, just in case sterling starts to rally. Because if the Brexit news gets a bit more positive, then sterling should rally significantly here from maybe 130 to 150-ish. On the other hand, on a hard Brexit, whatever that is, as we discussed earlier, I could see sterling going down to 110. Those are not predictions, but that's the range that I'm thinking in, and we're kind of bang in the middle of that at the moment. Hence, the hedging is around about half the portfolio. But remember that these funds are not UK biased, so we have significant overseas exposure. And in fact, I am positioned for a hard Brexit. So your investors shouldn't worry too much, because at the moment, we're positioned for that.
Okay, great. It seems to our clients that Trump is having a big impact on global markets. What positive and what negative influence do you think he's having on those markets?
Now, this might seem slightly controversial, but by and large, it's been pretty positive in terms of where we're invested. And at the end of the day, that's kind of what I really care about. And we've had a big bias to the US pre-Trump, and in fact, we increased that post-Trump because I felt that Trump would be positive for US equities. It was a bit of a sort of contrarian view at the time. And I think that's been borne out. Your question, I guess, is where do we go from here? I still think he's a businessman. He is naturally a conservative with a small c. He is a small government and pro-corporate. So I think that will continue. I don't see any particular headwinds there. I think we've probably seen most excitement, to be honest. I don't really see a huge positive from here. But more importantly, I don't see a negative, and we still yet really see the impacts of some of the deregulation that he's putting through. So I think that's something to look out for as well. So I'll be pretty positive on that side. I'm not talking about his Twitter feed, obviously, that's a completely different issue. In terms of internationally and the trade wars, that has been concerning. Frankly, I think he has a strategy. I know some people think that's ridiculous, but if I look at all the things that he's doing, whether it's North Korea, Mexico, Canada, Europe, NATO, there is underpinning this some logic, actually, that he's looking at the US that's always been kind of behind in terms of tariffs and trade, and he's trying to bring them up to a level playing field. So I have quite a lot of sympathy with where he is. The rhetoric clearly could be slightly more subtle at times, but other presidents didn't get things done. I think China's a different issue, though. I think this is a really important thing to stress. I don't think it's just about trade here. This is about protection of US security. The concerns are having Chinese companies involved with the supply chain of US goods and services that might be sensitive from a security perspective. So I think, yes, there's a little bit about trade, clearly with China, but there's more fundamental issues. And I expect the Chinese-US issue to go on a little bit longer. Having said all that, I'm still very positive on China and the US as economies and for consumers there. So I still think they're very investable, but this is going to meander a little bit further in the background. So long answer to your question, but overall Trump's been a positive, and there's not many people can say that probably.
Indeed. Looking forward, what areas or sectors do you see growth coming from in the next 12 to 18 months?
So my key theme at the moment is to be invested in companies that are playing to longer term structural trends, whether it's e-commerce, data security is a massively important area. I mean, you don't want to invest in companies that don't take that seriously. I mean, first of all, my job as an active manager is not to lose money, right? It's to avoid those companies that are vulnerable to these kind of left field events. And as we've seen in the last 12 months or 2 years, you can lose your brand very quickly if your data isn't secure. So this is a key theme that one wants to invest in. So I think technology, the Internet of Things, sensor technology, these are going to continue to evolve over the next 3 to 5 years, and we want to be invested in those. That doesn't mean blanket invest in the FANGs. I think there's a lot of hype and noise around those, but there are certain parts of technology that I think we do want to lead on. But also other areas like health. There is an obesity epidemic almost in the West and even in China these days. And I think governments are waking up to the fact that they can't afford to look after all these fat people in their countries and in their economy. And there's going to be a big push on this, whether it's in some more natural food flavorings, whether it's sugar taxes to actually reduce the usage. I think we're going to see more on that. So again, as an active manager, we've got to try and make sure we're not investing in companies that are going to be fall foul of the regulator when it comes to obesity, but also invest in those companies that are involved in producing more natural ingredients to help the products and foods taste nice, because ultimately we're not going to buy healthy stuff if it tastes horrible.
David, I know you're a very busy man. Thank you very much for taking the time out to speak with us. Thank you.
No problem, anytime. Thank you.